All right, I think we're live. I'm just going to give it a second, make sure everything is operating, make sure we actually have sound to start this time. Last time I tried a new streaming, I tried actually just going straight through YouTube, and for whatever reason, it was just like, hey, let's just go with the computer audio rather than like the microphone, which is weird because before the stream started, it asked how I wanted to do my audio, and I set the mic, so I'm not sure why it was like it defaulted, but either way, we're here now. It sounds like the sound is good. Well, looks good. Thank you, Nev. All right, cool. So it's been a very busy week. I had I think 6 different earnings of companies that are all within the portfolio, and like for reference, I don't have a huge portfolio. I think I only have between 8 to 12 names at any given time, and this week there was 6, I think, that reported: 5M Plus, Lemonade, Shift4, Eos, Redwire. Oh, and BlackSky reported, but I don't hold BlackSky any longer, but I do keep an eye on BlackSky as they are Rocket Lab adjacent. So it's been very busy, and we did that live stream on Wednesday, and at the time it was just the earnings release that came out at the time, and now we have the additional layering of the calls from EOS, from Redwire, and from Shift4's entire earnings as well. So there's a lot to go over, and I'll try to get us out in an hour, but if it goes over time or if it's falls short, like, is what it is. We can also maybe even split it. I'm not sure. I wouldn't be surprised if I just end up talking about EOS for most of the time. Like, that was a hard call to listen to and not walk away being bullish. So yeah, I don't know. I can't say nice enough things about that team at EOS. Just for like I mentioned in the stream, the last stream, like from where they were to where they are now is genuinely impressive. And I mean, we're not out of the woods yet, but it's just very impressive to see what they've done with what they have, or what they had. I don't know. So I guess we'll kick things off. We're going to kind of go in a format of like, we'll talk about EOS first, then we'll go to Redwire. It's a little bit in between that's space related, and then we'll go into Shift4 later. So if you are coming to the stream, maybe you're only looking for Shift4, maybe scrub more towards the end, but I'll try to keep it kind of blocked off, if you will. I feel like there's one more thing I had to say too. Now let's just get right into it. So I'm going to swap this view. You guys can see that screen a little bit better. Yeah, Lori, I see EOS price going wild today. I thought it was down the after hours after reporting. I thought it was down. I mean, I know it was down 5%, I think, during the Wednesday stream. So it's interesting to see it's going well today. I honestly haven't looked at I haven't intentionally looked at any of the stock prices pretty much all week. I haven't looked at the portfolio all week. Generally, especially like this week with so many companies all reporting in the same period, I generally try to just put the portfolio aside to kind of keep the emotions out of it, and then I'll kind of open up the wallet again like next week, especially like with some of the stuff we go over today. Like, there's maybe one or two companies that I'm a little bit more excited on than the others. So we'll get into that. If you guys have any questions along the way, feel free to post them in the chat. I'll try to keep an eye on the presentation and what you guys are saying, and I'll answer any questions along the way if you have any. Starting things off, let's get into the share prices. Let's see how EOS performed over the past couple days here. That's okay. Laurie, you weren't kidding. Up 20%. That's wow. 18. That's yeah, that's not nothing. Also, I think the screen's a decent size. Hopefully you guys can see. If it is too small at any point, let me know too. So yeah, that's wild. So over the past 5 days, it's 14%. Over the past month, up 33%. That is great to see, and honestly, not really surprising. There's one thing that we'll get to in particular that I'm amazed it's not up more, if I'm being honest. We're now at a $5 billion market cap. I don't know. I can't help but feel like this is going to be a larger market cap later than it is now. right? It's this company's going places. So we'll hop over to the presentation. So on the call, we had CEO Joe Mastrangelo. We had the COO, Joe Mahaz, for the first time. We're hearing from him. He's only been with EOS for 2 months, bringing 35 years of experience. We'll see if this opens up the right place. Yep. Scroll down. So this gentleman here, the Chief Operating Officer, he has like an impressive background that he's bringing to EOS, and it's not nothing. Like, it's you see folks trying to clown on EOS, but it's like, if this gentleman, served as senior vice president of operations for Europe and the Americas, generating more than $14 billion in annual revenue and overseeing 70,000 employees across 30 plus factories worldwide. I mean, that's saying something. Going from that background to going to EOS with, I think, 750 employees are now on the payroll. It's not nothing. I'm sure this guy isn't just throwing away his career and reputation, rolling the dice. So I think that's very, very bullish. We can do a little, like I mentioned, I'll try not to get too deep on any single person, but yes, this gentleman was senior vice president of operations at Jabil. I think that's how it's pronounced. And he'd been there for 32 years. So must have saw something at EOS that spoke to him. So let's look forward to that. Also on the call, we had Chief Commercial Officer and interim CFO, Nathan. I thought it was Croker, but the lady seemed to pronounce it like Cracker or Craker or something. I'm not sure about that, but either way, between these three gentlemen, the vibes were on point. They just seemed to really, I don't know, have a nice synergy, if you will. Let's hop over to the charts, give you guys something to look at while I'm chatting. Can we bring this bigger? Oops, nope, not that one. All right. Yeah, cool. So EOS for Q3, they had a revenue of 30.5 million, representing a 100% increase quarter over quarter and 3,472% year over year. That's a funny number, but like the doing the quarter over quarter or the year over year comparison of the two quarters isn't entirely fair, because it's like the line one opened in July. So it's like there's really nothing coming off those lines quite yet. Their batteries were literally being built by hand at that point. Well, starting to not be built by hand, I guess, more accurately. But yeah, there it is, the 3,400% year over year increase. Full year was not guided down. The top of the range was like, the range was tightened, I'll say, with the baseline remaining at 150 million and the top line being 160 million. So that would put Q4 at just call it $100 million revenue, 223% increase quarter over quarter and 1,262% year over year. So still like absurd year over year comparison, but again, not really a fair comparison. I think what really matters here is this next quote. We shipped 179% more cubes in October compared to July. So they're comparing the first month of each of the past two quarters. And this is crazy. Like, and in the first 4 days of November, this is why I'm surprised the stock isn't up more. In the first 4 days of November, the team has shipped 83% of August's total volume. So I had a gentleman on the Patreon reach out and he was like, is this feasible? Like, at what point, like, how bad do you have to meet guidance before the SEC is like, hey, you're kind of misleading investors? I think that quote alone, 179% more cubes in October compared to July, and the first 4 days in November is 83% of the entire month of August. I think that tells you the kind of trajectory we're on for Q4. Yeah, it's going to be a interesting. I don't know what happened to there. Revenue versus capacity. That's interesting. Good thing we don't need that one. Oh, they're all in. What? is happening? Gonna have to refresh here. Oh, or maybe not. I don't know what that was about. Little bug, I guess. There it is. Okay, it's all fine. All right, so we're going to move into margins. I mentioned this on Wednesday's live stream as well. Like with the factories being down, it's like, yeah, it's like when you have outliers like negative 6,000% operating margin, like it's like you can't even, what do you do with that info, right? Even if you tighten the range and bring it only down to 2,000 to 0 being the range, is still like odd to look at. So I just wanted to kind of like show these zoomed out, because I think it's fair not to just really zoom in and, because this is like a nice easy chart to look at and be like, oh, it's margins are great, but I think that it's unfair to bring up how nice the current margins are without acknowledging the previous margins. But again, it's like you want to hand wave that away. The factories weren't running; they were in their like basically a capex phase, like scaling up phase. They weren't really doing anything. But all this to say, the past 4 quarters, and we could even extrapolate this a bit like further into the future as well. These relationships are just going to continue to look nice in the next couple quarters. On the call, they reiterated that they expect to achieve positive contribution margin in the 4th quarter of this year and achieve positive gross margin as we exit the 1st quarter of 2026. So these are just going to continue in the direction that you see here on the screen. And it's just, yeah, it's one thing to have nice revenue, but it's not only that, it's like the margins are improving over time as well. So it's like that, I don't know, that just everything kind of like flowing in the right direction. We're going to zoom out. We're going to actually just look at the raw numbers, because there was something that was like, and it kind of like Rocket Lab. It's like no one's investing in this company looking at the EPS, and well, maybe some people, maybe that's why it's honestly so critiqued. But the earnings looks really poor, right? And it's like, well, what earnings? Like they're not ramped. They're like, it's going to be a while before earnings, right? Like proper net income. But I think a lot of folks like were looking at, negative 99 cents of EPS in Q2, and then looking at the negative 4.79 for EPS in Q3. And it's like one, it's like, I don't know. It's important to keep an eye on these kind of things, but it's also important to layer in the context. And for net income, it looks particularly bad because of the change in fair value of warrants and a change in fair value of derivatives. I'm not sure if you guys can see in the bottom right. It's like, I don't think I can make it any larger, but the sum is negative $568 million. So that is it's like non-cash tied to mark-to-market adjustments driven by the 122% stock price increase. So it's like financial jargon, financial juggling for when the share price goes up, things have to be like recontextualized. So it's like kind of like a one-time thing that unless the share price continues to do what it's done today, we're not going to have to worry about that too much in the future. This is a kind of like a one-time deal. So, if you just simply wanted to delete that, EPS is already twice what it was. Like not literally, but like close enough to 278 from what was 479. Anyway, enough about that. It's one thing to kind of point out. It's I think easy to criticize EOS without context. A lot of you folks, if you're here, you're probably familiar with Rocket Lab as well. It's easy to like look at Rocket Lab's margins and be like, oh, well, they suck. They're not financially astute. But it's like, okay, but what happens when all the money that's being used to build the new product doesn't need to build that new product anymore, right? That money just gets tucked in a pocket or put towards the constellation, put towards more factories, etc. So it's like important to keep that in mind and kind of separate the wheat from the chaff, so to speak, with things like, for example, the margins, like we went over a moment ago. Okay, that's margins there. We're at almost 20 minutes in. There's no way we're getting all 3 companies done today. Moving to the pipeline / backlog. there's something I've been tracking for a little while, and I think that we have enough data that it's like, oh, what's going on there? Hold on, did I make a mistake? No. Okay, we'll come back to that. One thing that I've been tracking is like each time that EOS reports whether it's their lead generation, their pipeline, their booked, or sometimes their booked orders, they haven't been consistent on that. Well, actually, I think they just stopped doing it. Actually, I think you can see all the numbers were there, and then suddenly they just stop in Q1 of 2025. But all this to say is you can do a bit of, what do you call it, like reverse engineering or reverse mathematics, what I'm going to do, and you can kind of land at the dollars per kilowatt hour that they're expecting. And to make things nice and concise, I made a little chart comparing each of them to give us an idea of what to expect in terms of average selling price going forward. So you can see, again, it's really messy. And again, context, 2023, this would be not the Z3s, not their current product offering. But during this era, this kind of mid 2023 onward, that's what we're looking at to arrive at the dollars per kilowatt hours. On Wednesday's stream, I mentioned that we're kind of using like 245, 250. But if you're looking at like the actual backlog, it looks closer to like 280, I guess, give or take. So said differently, the 245, 250 dollars per kilowatt hour is kind of conservative based on the current model that we have. And if you're not familiar with the channel, or sorry, if you are familiar with the channel, you'll know that I build these models like quite conservatively. And that way it's like what ultimately in these models is like a price formula is telling me that it's like good to go, there's multiple layers of margin of safety built in. So again, these aren't the end all be all by any means, like do your own research, of course. But that's kind of what I work with. Okay. Additionally, there was a question on the call regarding, we went over the SAY questions, the SAY technology questions the day before the call. And there was that one question in particular, and I think it was asked about, are data centers on your radar? 22% of EOS's pipeline volume is data center related. So that's an emphatic yes. Yeah, it's definitely on the radar. And I don't have proof of this, but there's that customer in Q2. I don't know who they are, and I think we'll find out probably pretty soon. There's a couple nods to that particular customer that the batteries are performing really well in the field. And if I'm not mistaken, that customer has been called a blue chip customer in the past. So if you're not familiar with blue chip, that's like, I'm thinking like, I'm under the impression there's like some interview I saw a while back. Somebody from, I think Microsoft was talking about like a new battery technology for data centers and blah, blah, blah. And it was one of those things that like in my biased point of view, I'm like, that's kind of got to be EOS that they're talking about. So all this to say is I'm kind of under the impression it's Microsoft, but like it could just as easily be Google or Amazon or like, name it. Like every company needs a data center these days, right? Like every company is an AI play somehow. So yeah, that interesting data point that 22% of the pipeline is data center related. Moving to Frontier. So Frontier is that what is going to be a very large customer. What was originally 5 gigawatt hours later increased to bids for 10 gigawatt hours, and now more and more recently 11 gigawatt hours. And sure, that's just MOUs, that 11, but 228 megawatt hours of that was awarded in Q4. Additionally, though, there's a mention on the call that Frontier's UK cap and floor projects, there were 177 projects submitted, 16 of which are using EOS's technology. And of these 177, only 77 advanced to round 2, including all 16 of the EOS related projects, representing roughly 20% of the projects that made it to round 2. And that outlines that 11 gigawatt hours of battery energy storage. So that's, I mean, awesome to see, right? It's another step in the right direction. We do have a very small new customer, I guess. Where am I losing my notes here? During the quarter, we delivered over 30 million in revenue while adding an initial order for behind the meter storage for a large client in Germany. So I don't need to just trust me, bro, on this, but like the math is if you take Q3 on backlog of 644 million, add back the Q3 revenue with 30.5 million, then subtract Q2 ends backlog 673 million, we're able to identify that this order is a $2.4 million order, representing roughly 10 megawatt hours. So that's why we didn't get any press release for that. It's a small customer, probably only a dozen cubes, but not nothing, and like they mentioned, it's a large client in Germany. So as with any kind of new technology, it's understandable. You kind of dip your toes in, and then if it performs well, which it is, you can only assume that the customers are going to come back for more. And then Q4 bookings, they're already north of 220 million. This was an interesting data point. I'll bring this up because I'm kind of like half fact checking myself. Using the math outlined in Wednesday's stream, the 750 megawatt hour average at $250 per kilowatt hour, we're arriving somewhere closer to 245 million. And they mentioned that the Q4 bookings are north of 220 million. So what I'm thinking is that either it's like a large kind of test the waters client, kind of like that one we talked about for Q2, where they kind of basically sell the cubes for a little bit less than they would have, as like a act of goodwill, so to speak, knowing that like, hey, try our product for a discount, and if you like the product, buy the product, right? So my thinking with that is either it's like being sold for just a slight discount, or simply the communication of MN8 Energies being up to 750 megawatt hours, maybe only I think I did the math last night. I think it's only like 625 or so megawatt hours is actually booked, and that's why they're saying 220 million. At the end of the day, it's like I don't want to worry too much about like 25 million in the grand scheme of things, but it's just one of those things I like to fact check myself if I'm directionally inaccurate. Well, I mean, I guess I'm directionally accurate, but could be more accurate. Just wanted to point that out. Moving to the balance sheet. EOS achieved the final cash receipt milestone under the Cerberus Capital Management Delayed Draw Term Loan with $43 million of cash received in October. This $43 million, from my understanding, will be added to both cash and debt. So that will boost liquidity for Q4. I'll actually bring up the liquidity as we're talking here, because that was another point of criticism. And it's like, yeah, if you're looking just at the current burn rate, it's like, sure, we're going to run out of cash in mid 2026, but realistically, EOS is going to raise probably more cash, right? There's probably going to be an offering in the near future, as well as a couple other things that we're going to talk about here. Cool. I just glanced at the chat and see someone trash talking Redwire. That's so good. Actually, hold on one sec. I'm going to scroll back a little bit, make sure I'm not missing anything. Cool. Yeah. Fair enough. Redwire is not the easiest stock to love, that's for sure. Yeah. Yes, sir. Cool. And I see a new member. Thank you, James. Much appreciated. All right. We'll continue on with the liquidity, or the balance sheet, I guess. EOS completed another sale of tax production credits or was that Q3? No, that was recent. So that's going to be recognized in Q4. So they monetized $11.8 million of 45X credits that were generated in the first few quarters of the year. So the $11.8 million worth of 45X credits at a roughly 90% realization rate is going to be roughly $10.6 million net cash proceeds after the discount. So that will go towards cash and cash equivalents. So a bit more of a runway there. And finally, there is also that $24 million that's being awarded from Penn State. Recognition for that starts in 2026 through 2027. I would be willing to bet that that's going to simply be recognized against CapEx. I don't know if they would worry about it going through cash and cash equivalents just to kind of, I don't know. But yeah, I don't know. It's not a huge amount. Well, I mean, it's not nothing, but it's going to be recognized over like the, I don't know, 8 quarters, I suppose. So it's not going to be not going to be that needle moving in the grand scheme. Okay, capacity. They talked about Turtle Creek's footprint not being optimized. Now, I mentioned it on the Wednesday stream that I'm under the impression that they're going to bail on Turtle Creek at the end of 2027. And I was correct in my, I couldn't recall if it like I was not sure if it was Tesla or Eos, but I remember one of those companies talking about an inefficient original manufacturing process where they had to leave buildings and stuff. And yeah, the materials in Turtle Creek have to travel 2.1 miles across 3 floors and 2 buildings from start to finish. The new building will decrease this cost by 86%, vastly increasing throughput. Now, to contradict myself, once line 2 is validated, Eos mentioned that they plan to go back and retrofit line 1. So I'm not sure. Yeah, I don't know. That'd be cool to see. So like maybe that does mean that the original factory could have 2 lines in there. So I guess we not just have this new factory for 4 lines, but if we do stay in Turtle Creek, maybe we're looking at 6. So 12 gigawatt hours total. And this next line is crazy. Eos is positioned to have their suppliers build a line every 90 days if needed. So we were talking about that modularity, that like kind of copy paste, that factorioism of Eos's new factories. There it is. Like from like the original line took them like months to set up. And now they're talking about being able to build a line every 90 days. In Q3, EOS was at a 15% capacity utilization, 15% in Q3, and they're on track to exit Q4 at 90% plus. So, I mean, yeah, that's a meaningful uptick in the capacity. We can take a little detour over there. Actually, we can zoom back to that original chart that was broken. This is kind of what we're charting for capacity and estimated revenue. So you'll see that they more or less track each other, and that's based on give or take like 20% downtime. That's for like maintenance. That's for like breakdowns, repairs, whatever, that sort of an idea. And yeah, that is annualized. So if in case you missed that, the stream on Wednesday, basically what we've done is we've just gone literally line by line, using all the references that we have available, 1.2 gigawatt hours as of Q3 end, for example, 2 gigawatt hours coming out of 2025, for example, and kind of extrapolated that forward based on that copy paste mindset for the new factory. And also, this is only bringing us to 8 gigawatt hours as of mid 2028. So, I mean, if there's capacity, or I should say demand, they can bring up that capacity a lot quicker than what is modeled here. Like again, conservative on conservative on conservative. And you can see at the bottom, there's even like a variable for downtime. Sometimes it's 80%. Actually, we'll even zoom back a little bit further. They mentioned 15%, but just I keep in mind there's like a slight delay for the cubes being shipped versus like built, right? So it is they mentioned 15%, but we're looking more at like 40, and that's going to continue to rise over time. All in all, I think it tracks it fairly ish, but that's the kind of beauty of these models, and they're all modular. Like you can just kind of plug in your own values as you see fit. If you think I'm not bullish enough, move the lines forward, that sort of a thing. We'll kind of wrap up EOS here. I realize we're almost halfway through. Realistically, we're probably going to go over a bit, but energy density. Yeah, energy density with the traditional cube solution, with 1 acre, you can deliver 100 megawatt hours. EOS mentioned that same 1 acre and in building solution, because EOS's batteries can be in buildings, they can be literally like vertically built, right? Because they don't have to worry about fires, they don't have to worry about like noise. They just stuff a bunch of cubes in a factory and call it a day, right? When Tesla unveiled their mega pack autocorrect, they unveiled their mega pack 3 in September, and they cited 248 megawatt hours per acre. Well, EOS is able to deliver 1 gigawatt hour because of their form factor, so a 4x. That's meaningful. Finally, we'll touch on the short report. There was that critique of one of the batteries overheating and blah, blah, blah. The battery in question was mentioned on the call. It was charged to 200%. The electrolyte heated up and some non-toxic steam was released as the cube was designed in case of an emergency, that the steam is released as it was. So again, context, like these batteries in the field aren't going to be charged to 200%, right? There's a reason that this happened at their headquarters and not even at Turtle Creek. Well, I mean, allegedly at Turtle Creek, but they only posted any sort of proof about the Edison thing, but it's like that. We already knew about that. And now it's like, there's more context. Like, yeah, the battery was charged to 200%. Like, charge any battery to 200%. Go do that with a lithium battery. Don't do that with a lithium battery, but you know what I mean? It's like, it's not going to end well. Yeah. All in all, very bullish on the EOS call. Like, very bullish on the EOS call. I don't know. I'm a little concerned about liquidity. I don't want to just be like blindly bullish. I'm concerned about liquidity, but also not worried about liquidity. I guess more accurately worried about dilution. Like, I have no doubt that they'll be able to raise capital, especially with Cerberus on board and all the friends that they're making along the way. But yeah, a little bit more dilution would not surprise me. And I'm not talking about the upcoming Cerberus dilution. Like, we already know about that. But it wouldn't surprise me if they do need to raise a little bit more capital. One final thing that we'll look at, I guess, is the price to sales. If I could find it. Current price to sales looks crazy, 42. But if you go ahead, literally 1 quarter, price to sales is at 13. And again, that sounds like, when you look at the industry averages, like, which one is it? I think Dow Jones, like all the indices, like the more or the less conservative index, I guess, like the more tech and like, well, just say the more tech related indices, those are like at 3, but most companies in those indexes are not growing at 1,200% revenue growth. So if you simply look ahead, even just a couple quarters, it's like it's already below 10. And that's based on the current share price. No, that's not actually, or is that? No. Yeah, see, the models are still in progress, but the stuff up to current day is all accurate. But and the 13 is, that's based on the current share price. So that's going to get, continue to get hammered down, that price to sales. And yeah, I think that's it for EOS. If you guys have any questions, let me know. And I think we'll continue forward with Redwire. Just give me 1 second here. Cool. Redwire, man. Yeah, Redwire is an interesting one. Let's check the share price. Let's do that with each of these. Redwire. I know that first day was particularly bad. Yeah, 650. Yikes. Let's go back a year. How have we been doing? We've seen as high as $25, and we are now at 6.5. Oh, it's up 10% today. That's or is that after hours? No, that's at close. Interesting. $1 billion market cap. Yeah, interesting. A lot of changes happening with Redwire. On the call, we had Chairman and CEO Peter Canito. We had the current CFO Jonathan Bailiff and the Chief Accounting Officer and soon-to-be CFO Chris Edmonds. That's effective December 1st. Vibe check on this call. I give it a 6.5 out of 10. I don't know. Like, Revenue, well, let's hop over. Revenue was 103 million. Where are we looking? Revenue, let's just do this one. Revenue was 103.4 million. 49.5 million of which, roughly 50%, was related to edge autonomy. This is a 67.5% quarter-over-quarter increase and 50.7% year-over-year increase. Guidance, I think, is why Redwire sold off to the tune that it has. Guidance was reduced from, actually come up here because you guys can see it too. Hopefully you can see that. It's all this text here. Yeah, it's too bad I can't make that. Whatever. I'll be able to. We'll just go off the last couple anyways. I don't need to read the whole thing. Full year guidance from Q1, it was 535 to 605 million. And as of Q3, it's down to 320 to 340 million. We'll also talk about Q2, I guess, 470 to 530 million. That's crazy. Like, that's just like, I don't know. With the new guidance, we're looking at, I guess, like a flat 103 million again, 103.4. Like it's like oddly flat. That's the mid range, but like that's like positive 49% year over year, which is not good. It's good. It's not good considering that they bought a company that was twice their size. Like this should be an easy 100%, but it's just not. Even if you look back at like what we mentioned, the 103.4 from Q3, roughly 50% of that was from edge autonomy. And if you look back at Q3 of 2024, that would be going from like 68, call it 70 million down to 50 million. Like it's not great for base Redwire. One thing that kind of, I guess, bothered me about the call was that there was a mention that like, oh, the guidance is okay. And maybe I misunderstood. I don't think I misunderstood, but the guidance is down because the government is shut down, so the awards are halted. Like, how long has the government been shut down? It's like 30, 40 days. And within that time, I guess Redwire's gone from 470 to 530 million down to 320 to 340 million. And I'm like, just maybe missing something, but I'm like, how are you revising guidance downward? Like, we'll just go base range. How are you revising guidance downwards to the tune of 150 million based on some government awards that haven't been dealt out yet? Like, these awards are like, you get the you might get the down payment, sure, but you don't get those, like, you don't get the revenue, the bulk of the revenue, until the product is delivered. So what are we talking about here? Like, what, like, that's not an excuse. Like, I'm sorry, it's just not. That like, there's a company I invested in a while back, and it was like, they just kept saying, "Oh, the Ukraine war." Probably just got myself flagged on YouTube, but it's like, guys, like this is like, you've had time to deal with this. Like, it's been like 10 quarters now. Like, how are you still saying that the Ukraine war is affecting your, like, you've had plenty of time to pivot. I don't know. But yeah, I don't know. To hear that, it just felt disingenuous. It just felt like I don't know. I don't want to say not honest, but it just felt a little bit, I don't know, not telling to the degree that I like things to be told, I guess. There was another EAC impact as well in Q2. And I made a whole, you guys might have saw the Q2 video that I made for Redwire. I did my best. To kind of give them the benefit of the doubt of like why Q2 was as bad as it was. You had all those transaction fees from the edge acquisition. You had this EAC impact that was discovered in Q3, or like identified in Q3, but then kind of pulled into the Q2 print. And my understanding, or my, I guess, hope, was that they were just trying to just put all the bad news into one quarter. Well, we have this $25 million impact in Q2, and in Q3 we have another $8 million. Now, friend of the show, Space Investor. I'll bring him up because he's just an absolute gem, like genuinely nice person. I don't have nice enough things to say about him. He actually interviewed Peter Canito earlier today. And he he asked me if I have any questions, and I said, yeah, here. And I can't say the question that got shut down, obviously, but there was another question. The EAC question also got shut down, but then I guess Peter, before the interview, was like, oh no, go ahead, ask the EAC question. So kudos to Peter for not, hate to use the word cowering from that, but Peter did mention that the EACs will continue to a lesser degree and will drive down over time. I think he meant as a percentage of revenue, which is like, okay, but even just having that, like, okay, we're kind of done with EAC impacts. Good. Also, if you might hear a baby crying in the background, they're with the wife, so no worries there. They're taken care of. Probably just need a little bit of milk. So the EACs will continue over time, but yeah, I don't know. I kind of thought that they'd be through the bulk of it, but maybe not. They did touch on edge autonomy. They've started the process of integrating the teams, and they're seeing plenty of opportunities in terms of payloads. That's really cool to see. I don't mean to oversimplify Redwire, but I think that I know that there are going to be a lot of synergies in terms of that, especially when you're like looking at like the like Space Investor and Peter. They talked about VLEO, very, very low Earth orbit. For those unfamiliar, most satellites are like the 500-kilometer orbiting range. Very low Earth orbit is like much closer, like 200. I think 200. We'll call it 250. I think it's like 200 to 300 is the range. But I mean, they're developing two different platforms, one in the US and one in Europe, and they both kind of serve a similar niche, if you will. And they're actually very cool. Like this is one of those things. Like in a vacuum, Redwire is a fantastic company with some great tech, right? And sure, say what you will about the management. Like I'm kind of, like I said, given benefit of the doubt, I kind of have mixed feelings about them, but their VLEO stuff is really cool. Like their satellites, because they're closer to the atmosphere, they kind of drag, but they actually use that drag and like breathe that air, for lack of a better way to put it, to give them energy to keep them boosted up and in that orbit. Not indefinitely, but like enough to, keep them in orbit for a much longer period of time. Really cool. Hopping back to the sheets, we'll go down to the margins, because this is where I know I keep saying benefit of the. I think if you need to say benefit of the doubt this many times for an earnings call, it's probably a red flag. But I'm trying to give Redwire the benefit of the doubt. The margins are going to be back to where they will be going forward, if not better. If you actually look at the edge, the comparison of the two, I did a whole breakdown of this in a previous video, but like cutting to the chase, you can basically take the annual data for each of the businesses and then put them together as though they've been operating together the whole time. And you can see that the the combined gross margin is expected to be around the 30% mark if you combine the two. Operating margins similar. It's not as good, but it's better than what Redwire was on their own. So all this to say, Edge is going to be accretive to Redwire once they get things sorted out. Now, one of the many reasons the margins didn't look as good as they would have, is that there was an $11.2 million non-cash purchase accounting adjustment related to the Edge Autonomy acquisition, and that the gross margin would have been 27% otherwise. Gross margin being green there. Hang on. Oh, sorry. I'm looking at, I was like, yeah, it looks like it is 25. No, 25 is for Q4. That's kind of the baseline, what to expect going forward. Maybe like 25 to 30% is what to expect going forward. But as you can see, the gross margin, I think, was 17%. We can pop back up real quick. Gross margin 16%. So yeah, would have been 27.1% otherwise. They go on to mention, now that we have fully recognized the inventory fair value step up in earnings, it will no longer impact gross margins. So that 11.2 million impact, and as well as the EAC impact. I mean, well, maybe the EAC impact is just baseline going forward. But I don't think we should expect like a $24 million hit like we did in Q2 again. Knock on wood. It's one of those things. You need to walk the walk at this point, Redwire, to put it blunt. There's a mention, 27 to 30% gross margin should be the runway going forward. Hopping down to liquidity. Revenue, where's the balance sheet? Almost zoomed in too much. There we go. Liquidity is down to 89.3% from Q2's 114 million. And Redwire, they quietly mentioned a $250 million at the market equity offering program in the coming days. I haven't checked my email, but I wouldn't be surprised if it's sitting in my inbox right now that they have formally announced this equity offering, but that'll boost their cash and dilute shareholders more. So brace for impact, y'all. I think that's this 250 million. I think that's largely why the stock is down. Maybe, I don't know. I think people are just giving up on Redwire, honestly. Well, I mean, I know they have it almost unfairly, but like I said, it's you gotta prove yourself now at this point. And I don't even say that to I'm not trying to like posture or be a jerk about it. Like, it's just, I'm speaking from other people's perspective. I just see that sentiment a lot of like, I'll buy when X, Y, or Z happens, and understandable at this point. Backlog was up 8%, both in both quarter over quarter and year over year. So backlog is at 355.6 million. There was no mention of the Valkyrie thrusters. I've talked about these in a previous video. It's unclear what's happening with these anymore. Now that Redwire's partner Phase 4, who they were developing the thrusters with, they had their propulsion assets acquired by Quantum Space. So yeah, I don't know. I'm not sure what happened to those. I don't know. I can't say much more, but hopefully they're still on track. We are going to pivot to Shift4, but first, there's just a couple quick things. Should we touch on that? There's a couple Rocket Lab related things actually, but maybe we'll just save those for the Rocket Lab Weekly tomorrow. Yeah, I'll give you guys a little tease. There's a haste coming sooner than you might expect. Another launch sooner than you might expect, not haste. And there's actually two things. One thing's not written down here, but there are two, I'll say points of curiosity. One is with hypersonics and the other is with MDA. So I'll just tease that out for tomorrow and we will move into Shift4. I mean, we might just kind of skim through Shift4 because it's just one of those companies. It's just like, if we go through, actually real quick, before we do that, let's check on the share price. I'm curious how this one went. I heard it was really good, but then I saw the share price today. Yeah, how's it 66? This is crazy. $5.8 billion market cap. Keep that in mind. Let's be generous. We'll call it a $6 billion market cap. That's an interesting valuation for Shift4. I don't understand where they're at. Like, what are we at year to date? Down 36%. Like, man, interesting stuff. So on the call, we had CEO Taylor Lauber, CFO Chris Cruz, and this is the first call without their former CFO, Nancy Disman. We'll get to the Jared Isaacman stuff a little bit later on, but I think one of the reasons that Shift4 is trading at a discount, in my opinion, because the management is moving around a little bit between Isaacman and with Nancy/Chris here. But I think the reason that this doesn't actually matter is Nancy was serving for a set period of time. I think it was 4 years as the CFO. She was on the board. I think she was on the board actually during her, what do you call that, stay? 10 years at the word? During her time as CFO. And then it was the plan, like once she's done that 4-year period, to move back to the board. And Chris Cruz was on the board, is now going to be the CFO. So I think without that context, I guess, is it just looks bad. All the CFOs moving around. Same thing with Redwire, by the way. Or no, yeah, we did mention that with Redwire, but it's just when management gets shuffled around, usually it's a red flag, but in this case of Shift4, nope. And especially listening to the call, like Chris Cruz is just, I don't know, just a good match. Same with Taylor Lauber. At first, it was like, well, who's replacing Jared Isaacman? Like, it's got to be Isaacman as the CEO, but like, I don't know. You would listen to Taylor talk. They had their investor day, I think, that lined up with Q3. Just listen to the team talk. If you're unsure about Shift4, actually, even better, look up the, what was it called? Oh, the mission was called Inspiration 4. I think it's called like a Countdown to Space or Road to Space. Just look up a documentary with Jared Isaacman. It's like their whole lead up to that team launching to space. And if that doesn't excite you for the quality of character behind the doors of Shift4, I don't know what will. I literally watched that documentary and I was like, I'm investing in Shift4, not a lot, but I was like, I'm investing in Shift4 based on that man alone. Like, there's just certain CEOs that you see and you're like, yeah, like Peter Beck, you hear him talk and you're like, there's something different. It's not just a bunch of buzzwords. It's not just like a bunch of fluff. It's just something that you sense in them. And at the risk of sounding like a total fanboy, that's what I saw in Jared. That's what I see now in Taylor. It's just a very competent crew attracting competent people. Like, I don't know. I can't say enough nice things about management. I really like Shift4's management. Anyways, now that I'm done fanboying, don't nothing. That's one of the things for tomorrow. We'll save it for tomorrow. It's BlackSky related. I'll say that. I mean, Shift4's, it's just one of those things. Like, you just kind of casually scroll through their earnings. It's just like the results were in line with Q3 guidance. I think they broke records on every single major key performance indicator. I think literally every single key performance indicator. This is the first quarter north of $1 billion in total gross revenue. Now, worth pointing out, a lot of this print is artificially stimulated by the acquisition of Global Blue that closed in July. So not quite a full quarter, but pretty much a full quarter is with Global Blue on board. But Shift4, to their credit, they did a good job of highlighting that their inorganic growth was 18% year over year. So it's one of those things you see, and they do quite a few acquisitions, none as big as Global Blue. That's their largest to date. And I think it's easy to criticize, like, oh yeah, all the revenue is just bought. Well, no, it's not. It like I said, their base business is growing at 18%. And historically it's been, 18, 20, even as high as 25, 30% at some points organically. They announced a $1 billion, right? $1 billion stock buyback program. Now, remember their market cap is $6 billion. So I guess they're buying like a lot of their own business back. They mentioned that their own stock is one of the more attractive opportunities they see, in contrast to more acquisitions, to literally buying their own company instead. So yeah, like I mentioned, just scroll through their deck. It's just like, how do you not like what you see? Like, when you start talking about like the wins, it's just like, just hotel wins and more hotel wins and stadium wins and more stadium wins. More, what even are these? Are these hotels too? Yeah, I'm not very fancy. French leading department store group for fashion, luxury, and beauty. Yeah, that's not my cup of tea, but I mean, it's, oh yeah, Lululemon. Okay. Hertz, crypto, like you name it, they're everywhere. And they're, I mean, as you can see, expanding quite dramatically. And this global growth, this is only, I think, 3 years or so. I think in 2022 is when they started like branching out away from North America. So not nothing. Yeah, just kind of skimming through. I mean, guidance, they, I think, raised on every metric. So we're looking at, volume of positive 26%, 27% year over year. Gross revenue less network fees, 46 to 49%. Adjusted EBITDA is going to be up 43 to 45% year over year. And this adjusted free cash flow, but 50% adjusted free cash flow conversion. Like, I don't know. And yeah, like, sure, it's like, okay, cool. Like, the company's doing great, right? The business is not the stock and the stock is not the business. So let's just look at the stock. Quick pitch, by the way, these valuation models that we're going over, these are available on Patreon. The Shift4 and Redwire models are going to be updated to represent Q3, the ones that we're kind of going over now. Just needed some final polish, probably by the end of the weekend. I'd imagine I'll have those published. The EOS one isn't ready quite yet, but I mean, if you're on the Patreon, just reach out and I'll get it your way. But yeah, these are available. They have everything from, I mean, everything you see here, not just the financials, but key performance indicators. We'll get into the ownership as well for these companies. It's a lot here. And I don't want to scroll too far to the right because I don't want you guys to peek at the price targets. got to keep something in the hand, Yeah, like looking at Shift4's guidance, looking at what they're targeting for the next quarter, the next year, and then you look at like a current price to sales of 0.9, like we'll call it 1. Like there's some things I just can't wrap my head around, and this is one of them. Like the price to earnings is 23. Like, oh, sorry, we're even looking ahead. Okay, so the forward, yeah. Am I looking at the right line? So yeah, the forward price to sales is 0.8. Current price to sales is 0.79. Current price to earnings is 40. You look ahead one quarter and it's down to 23 already. The price to earnings forward, yeah, 21, we'll call that. Price to book is 2. That's fair. And price to free cash flow is 11.5. Forward price to cash. And yeah, the forward price to free cash flow is 7. And when I was looking at my numbers, where are we? Free cash flow, adjusted free cash flow. They're quoting for a $1 billion adjusted free cash flow rate exiting 2025. And you'll see down here, I only have 163. So I guess this is going to be 90 million higher somewhere. Like I said, these models are conservative. And if they're telling you that if they're telling you that it's fair to buy, well, one, do your own research, of course, but also like I don't know. I don't know. Sometimes I wonder why I'm not much heavier into Shift4. Realistically, like I'm buying probably next week again. I always like to sit on my hands for about a week after the earnings period, kind of digest everything. But like, as we're kind of looking things over, like if I was kind of forced to choose, actually, I think EOS has a much higher upside. EOS has a higher risk reward profile. And I think Shift4 is just, I hope this doesn't come back to haunt me, but Shift4 just seems like easy money. Like I'll be buying next week if the share price is remotely close to where it's at now. So huge grain of salt as always. The last thing that I want to mention, and this is like something I've been working on a little while. So I know that there's like services that you can use and they'll scan for all the historic buys and sells, but you miss a lot of context with those. There was this article published by Yahoo Finance a little while back, and it was like, oh, all of Rocket Lab's insiders are selling. And it's like, well, okay, but look at the sales. Like it literally says in fine print that they are to cover taxes. Like, is that what we're criticizing people for now? Like, oh, they sold their stock so that they could pay taxes. Like, like, come on. So what I did is I went through literally every single Form 4 that Shift4 has ever published. And as you can see, they're kind of highlighted like by color. So the greens are obviously like the buys. You'll see Isaacman makes a fair bit over time. Oranges are kind of like excusable sells, like tax related, for example. Red is just like they're selling without reason. One thing that, again, like can't say enough nice things about Isaacman, all these blues, these are donations, like every single one. So this one goes to the St. Jude's Children's Research Hospital. I think there are several, like St. Luke's Health Network. Just like, and if you like do the math on these, it's just astonishing how much money this guy is just like, I don't know. He's just such a, I don't know. I've already said enough nice things. Like I don't want to overdo it, but I don't know. Yeah. Good to see. But to what we were talking about a little bit ago with the whole stir up in management is like, yeah, so the CFO, they're gone and the new CFO is coming in and Isaacman is nominated to run NASA again, like a second time. But I don't know. And then what happens with Isaacman's stock? Because if you look at like the ownership, right? If you look at the ownership, you'll notice it's like um, ownership as a percentage, or actually, let me rewind a quick second because it's worth explaining. There are three different, how do you call that? Like share types, we'll call it. There are Class A's that are full voting rights, 1 vote per share. There are Class B that are held by like founders, early investors, insiders, and these are 10 votes per share with no economic value. So these are exclusively for voting. And there are Class C that are kind of like a hybrid, where they are 10 votes per share, but they do have economic rights. In other words, they can, they're worth something, right? Like the total A and C, that's the pool that you or I would buy from. A technically, but C is also factored in in the formula, right? So Isaacman holds at this point all of the B and C. Let me double check. Is that right? Yeah. Yes, because the A is with us. Yeah. And if you translate that to basically, well, you simply take like the Class A times those by 1, take the Class B and Class C, multiply those by 10, you get the amount of votes for each. And as you can see here, Jared Isaacman in blue has a supermajority, what we'd refer to that as. And then everyone else is down here below. So Isaacman has, basically, if he says something, it goes in Shift4. But this was also addressed on the call that there will be a they didn't say for sure. They didn't give an exact date because, like, who knows if Isaacman's even going to be, if it's going to go through this time. Maybe he gets nominated a third time, who knows. But after that reorganization, they would simply just have Class A, I guess, only. And as you can see here, this everyone else is the red, and Isaacman would have roughly 30% of the votes. So he's not planning to downsize his shares, and it mentioned explicitly he is not required to divest the stock if the NASA thing goes through, but he will relinquish the super votes associated with his shares. Yeah, I mean, I think we can kind of put a pin in things there. I'll take questions if you guys have any, but yeah, all in all, very busy week, very interesting earnings season, and very bullish on EOS and Shift4, and hoping the best for Redwire. What's up, T? Good to have you. Also, I'll swap this. Cool. Yeah, I think we'll kind of end. Nev, I don't know. I don't know what it takes. I think at this point, like maybe Redwire, I would buy after. Like I need to think about Redwire for a little bit. but I wouldn't rule it out. I definitely wouldn't make it any bigger of a position. It's probably like 5 to 7% in the portfolio. Um, but yeah, it's definitely not core position worthy. It's no EOS, we'll put it that way. I think EOS is at like 20% now. Actually, probably after today, it's probably teasing 25 again. I trimmed a little while back and it's just, I don't know. It's one of those stocks where it's like, I know responsibly I should trim because of its, its size of the portfolio. But at the same time, I'm like, I, I like those stocks where there's like that discrepancy where there's like people who are absolutely like against it, but people who are like super bullish on it. Because I find a lot of time one side is very right and one side is very wrong, and hopefully I'm on the right side of that line. Time will tell, but I mean, yeah, it's one of those things. You listen to that call, you kind of separate the what matters from what doesn't, and EOS is in a very, very good place. Still think Redwire's valuation is a bit silly, even with the current state. It's priced for bankruptcy. Yeah, you know what? Because that is a fair point, and I gave Shift4 its flowers. Let's do the same for Redwire. Like, if you do look at the valuation, it is kind of hard to pass up. The price to sales is like 2.5. Yeah, that's, I don't know. That is very cheap. When you look at like most other space companies, they're like, I don't want to compare it to Rocket Lab because Rocket Labs is like what, 50, I think, the price to sales, or 40, I think, like 40, 50. But I mean, it's been even higher. And for Redwire to be at like 2.5, I'm like, I don't know. I don't think they're going bankrupt. I don't think they're going anywhere. And I think they are poised to be probably a meaningful player in the Golden Dome. But well, time will tell once the contracts start rolling. Also, I don't understand the whole contract thing. Like, is the government closed or not? Because SpaceX was just awarded a bunch of missions. I think was that SDA related or NSSL related? I don't remember, but I'm like, what's happening? Like, are we giving out contracts? Are we not? Is it like department specific? I don't understand. Thoughts on the shareholder Tesla meeting? Bullish. Yeah, bullish. Like very, very good for the company. If you look at those milestones too, it's they seem crazy, but so did the first set of milestones, and Elon hit all of those. And well, the Tesla team led by Elon hit all those. And yeah, I mean, it's one of those things. Like, why would you vote against it? Like, if you're a shareholder, you probably want those milestones to all be hit. And if you're worried about dilution, well, just simply look at the share price appreciation compared to that dilution. Kind of like EOS, really. Like, are you worried about the stock reflecting a very high revenue? Okay, well, you kind of have to eat that dilution along the way. Like, it's just part of the game. I think it was Golden Dome related for SpaceX. Yeah, and that's why it's so like, what is happening with Redwire or like any other company, or what? Like, why does SpaceX get anything? Like, well, are we closed or not? Would you like to see 4 pay down debt over the buyback? That's a good question, because that's actually what's that other company, Pfizer? That kind of blew up in their face, worrying so much about share buybacks compared to paying off the debt, and it really backfired. So I don't know. I'm just trying to bring up their debt, long-term debt. Yeah, 4 billion. That's rough. What's just their equity less goodwill? It's negative technically. Stockholders' equity is 2.2 billion, but yeah, I don't. Goodwill is just it's just an empty metric. You can't sell goodwill. I mean, technically you can transfer it during an acquisition, but yeah. I think we're gonna wrap it up there, guys. Like I mentioned, the valuation models, they're available on Patreon. Hopefully those assist you in your research. And if you have any questions, please let me know. If you haven't already, like, subscribe. Thankful for you guys to be here, and I look forward to seeing you guys in the next one. Thank you for your time, and have an awesome day.